Welcome to Trading Lounge and the European indices for Friday, October the 14th. So the European indices, the DAX, is a little bit different from the S&P in that the DAX here never made a new low below here, where the S&P has made a new low below here. So with the S&P, we're just looking at, go back a bit further, as 1 and 2 here, and 3 and 4, and possibly wave 5 being completed here. If you watch the S&P video, there is a chance that the market could come down to this point here. But when you look at the DAX here, it's possible we could do the same thing. You know, we could put like wave 1 here and wave 2 over here for this. But counting, just going back a little bit here, you know, the counting down here as 1 and 2 is fine, and wave 3 down here is fine. But having 4 and 5 jammed up in here doesn't really fit well. It's more likely that this wave 4 is sitting sort of over here with this, and then we look at this as an ABC pattern over here. So if I could just borrow these for a moment and drop this down 1 degree of structure and move these out of the way. Because the trick is that we need, on an intraday basis, most markets will follow each other unless there's an inverse situation occurring, you know. So in this instance here, we'll just move these away for a moment, and we'll put this over here as, down here as a wave C is a little bit sort of low. We kind of got to have 5 waves up, and that's why I've drawn two wave structures here, because if we took the low in at this point here, the funny thing is that the European indices and the Asian indices are kind of in the they're either in front of the S&P or they're way behind in some way. And what I mean by that is that this is, you know, made a low here but hasn't made a low here as such. So it's easy to count this down here, isn't it? 1, 2, 3, 4, 5 here. That's kind of simple, you know. Over here it's a little bit different. So we either call wave 1 in here and we look at, you know, a larger wave A here and a larger wave B here and a larger wave C up here for wave 2, because that's where we could be heading with the S&P. We can be looking for the A wave, the B wave and the C wave up here for this, and then come down. There's different ways to look at, from going from wave 1 to wave 2 here. There's different ways to look at this as well. So I think I should just do that. In that, what we could do is we could also look for this move up here as wave 1, and then 2, and then 3, and then 4, and then a smaller wave 5 here, and then a sort of a deeper ABC pattern here, something of this nature, and then another 5 waves coming up here for this and finishing off this way, because wave 2 should be a 5-3-5 structure, an A wave, a B wave and a C wave here. So I'm just shooting the breeze a little bit here. So there's 2 ways that this could play out here. This is one of them here, this sort of larger one here, and the other one is really just having an ABC pattern coming, you know, a little bit sharper up into this space, and then we bring this wave 2 into place over here. So there's a couple of different ways to look at this. There's also the other way that we're looking at this too, of course, so which is, you can see that on the S&P video. I think no, it's not the 5K tick chart here. Maybe let's check the 1K. So basically looking at the bearish count, I think the 5K tick would have done the job okay here. So this, the other way to look at this, instead of calling this wave 1 low in over here, is looking from this wave 4, looking for 5 waves down here as wave 1, and then the A wave, the B wave and the C wave up here. And once we get up here, when we can call that top in, we're going to get 5 waves here anyway, right? So as I mentioned in the S&P video, the stocks have to climb a little bit higher. So this may push up through here a bit further. We may need to take this up here, but the main point, the takeaway here is that after we get 5 waves, we're going to see the market pull back anyway. So it's either going to pull back and head up, or it's just going to continue all the way down, and we'll look at this as wave 1 with an A wave, a B wave, and a C wave up here, and that would be the bearish count at that point. So I just need to let the dust settle after the Fed's announcement on the CPI figures and so on. So yeah, that's sort of where we are with this at the moment. So there's 2 counts there, but yeah, just coming back to this here, we never made a new low here. I mean, we could look at it as it down here as wave 1 and an ABC back for wave 2 and sit this up here, and you know, we could come down here on this down here to continue down as wave 3, 1, 2, 3, 4, 5, you know, which would kind of make sense looking at this here as 1, 2, 3 and 4 across here, and then coming down for 5. So yeah, the situation now is, though, all I can do is look at this 5 waves moving up here, and once the top's in play, let's just go to the 2K tick chart and just talk about that for a moment. So all we can do, we have to work out where we are first, and letting the dust settle is a part of that. So we know that from this low here, we're looking up as 1 and 2 and 3 and 4 here, and we're waiting for the top to finish off here. So always in a trend, it doesn't matter what degree of structure, there's a beginning, a middle and an end, and we've got the beginning, we've got the middle here, which is nice and powerful, and now we're into the end here. So at the 12.5 here, that's the closest largest number. We could probably expect, you know, the normal thing is to have, I'll just keep it very simple, is normal to have the arrival, the reaction, which we've kind of got now. Then there'll be the first high above the level, and then we can start looking at the ABC pattern here. Well, it may be an ABC pattern and then just continue up here. So that's what we've got to figure. That's what we've got to figure out. We will need to know if we're going to be bullish or bearish. So once that top's in place, we're going to pull back. We need a bit of a pullback, you know. I mean, technically it can go back 61.8%, which is obviously lower. But once that top's in place here, then all we need to do is look to go long. So we can go long above here, and of course we can also drop it down to the B wave here. They would be the safe trade. You can go longer earlier, that's okay to do that, but it's not as safe because you don't know if the market's going. I mean, once it's got 3 waves here, then you can go short. But that could be down here further. Don't take that price where I've drawn that, because in a nutshell, it can come back quite a way here. It can go from up here back down into this space here. Will it do that? I don't know. But if it's a bullish market, well then it probably won't pull that far back, you know. But once the Feds normally have their little announcement and the dust settles, then the trend just normally reverses and goes in line with the main trend, you know. So there's a good chance that there's a reasonable chance that the market could just continue down at this, you know, at that stage, you know. So we just got to be, because it's got to keep an eye on both counts, you know. And this would be wave 3 down here, of course. Well, yeah, so let's just, I mean, we have to wait for the top to unfold. You know, you might think that it's bullish, and you're probably right, you know. And how far it goes up is another question. So, but the bottom line is, because we got 5 here, then if it's going to be bullish, we'll get 3 here, and then we'll get another 5 up. So we could be looking up closer to the 13,000, I'd say. And we need to see if this is going to be a third wave up here as well, because a third wave would be longer than this one here. So that's the story, really, with it all, you know. And it's the same for the EUROSTOXX here as well. we could, you know, we could put wave 3 here, 4 and 5 here, but it's just too small. So to have this movement up here, put this over here as wave C over here, put this as wave B over here for that. Wave 5 needs to come down over here. We need a wave A up here for that. So an A wave up here, you could probably drop that over to here as well, not a big deal, and have 5 waves up there. So this move back down here, the main point is it didn't take this low out here. So it is possible that we could count this down as 1, 2, 3, 4, 5 here, like we have been doing as wave 1, right? And then have an A wave, a B wave, and a C wave up here. And there's a bit more to go up here, so we can, you know, it can go up to the 61.8% or thereabouts. It doesn't, you know, and then it can just come down at that point. That's the thing, you know. It can come down into wave 3 at that point. And the other count is that, well, we would have to look at this being corrective coming down here, and the only other way to do that, if I move that out of the way, don't need that in this instance. What else have we got here? The other way to look at all of this move here would be to if we're looking at that as blue wave A up here and wave B here, I'll put that over here, and then wave C up there, then we would have to look at this 5 waves down here as wave A here, and then wave B would be over here for that, and then we would have, copy that, would be wave C here for this wave B. And then we'll need 5 waves up there as 1 and 2 and 3 and 4 and 5, and I'm just sort of keeping it quite close to this old high here at the 35. We'll see how it travels though. But that would be it. They're the 2 counts, and you know, the thing is we have to wait for this to just top out. So if I can just draw that over here, it will come up to the 61.8% there roughly. If it's going to be bullish, it's going to give you an A wave, a B wave, and a C wave. It's going to give you some, I don't know how, if it's a very bullish market, then this is going to be quite small. If it's going to be a lazy market, but it still needs to get up here, well then it's going to come deeper down here. You know, this is going to become deeper here. But in one way or another, you're definitely going to see some sort of, in this leg here, you're going to see some 3-wave correction here. And if you're going to go long, then you can go long above there. You can go long earlier, but you're at risk because it can just be 1 and 2 and 1 and 2 and come down at that point, you know. And that's the thing about shorting it as well. Once you can identify 3 waves here, well then you can short it below anything below 3 waves. So that's where we are for those guys. Same as the S&P. So we just have to wait for the dust to settle, and it's the same with the FTSE here as well. But with the FTSE here, it's a little bit different, a bit more like the S&P. I can count wave 4 to wave 5 here quite nicely. So I can count down as 1 and 2, and then 1 and 2, 5 waves here for 3. Bit awkward in here, but it makes a nice A, B wave. I don't know about the C wave here. And then 1 and 2 and 3 and 4 and 5 here for the 3rd wave, the 4th wave and the 5th. So it does make a nice structure here, and it is below the 3rd and the 4th, and you know, all of that. So in this case, there's probably a good chance we're nowhere near the top here. There'll be, if I can just clean this up a little bit here, it'll be like, you know, there's 1 and 2 in here and 3 and 4. So basically we're getting the classic trading levels pattern. So it will look like this. If it's going, we're here now in this reaction part, and we'll be getting that first high above the level. So we'll be getting, we've got that, we're getting all that consolidation under the level there, and we'll push up here somewhere, and then you'll see an ABC pattern at that point. So too many objects on the chart. But anyway, you know what I'm talking about. So I can just get rid of these guys here, and so there'll be the first high, then the A wave, the B wave, and the C wave at that point. And then you'd go long above that top there if you're going to go long at that stage. So it's just really a matter of not doing anything, but just allowing the market to to come to you. You know, I think that's the trick with all of this at the moment, is not to preempt it. You know, I mean, what you see here is not what you get next. That's the takeaway here, really. And the second point is we need to move past this ABC. We need to see if this is going to come down here, or we need to see that we're going to be going long above this top here. It's as simple as that. On the daily chart here, if we just have a look at this daily chart here, because we've been working a bit of a triangle pattern and a few other little things, you know. If I put this in line with the US markets, then we'd be coming up for a wave 2 here. So we'd look at this as 1, 2, 1, 2, 3, 4, 5 for the third wave, the fourth wave, and the fifth wave here. What we're trying to do is identify, is the fifth wave finished? And by, you know, what we just counted then, we counted 5 waves down, so there was a good fit for that to be in that place, wasn't there? So now we're just trying to get a bit of evidence up through this way. It can come all the way back up to there, so we'd probably look at this as, you know, this, we're looking at this as wave 1 here at the moment, so we'd need wave 2 to pull back, and then 3. So basically, normally it would come up to the wave 4 here, and then it would have the B wave, and then the C wave up here. And what we're really looking for in the bigger picture is this third wave down here. This is the one that we want, you know. What that's all about. Will it be probably oil being too high at that price? Maybe Mr. Evil Putin is, you know, putting his tactical small nukes into cities, and the US retaliate, or, you know, there'll be something, some news to fit this event over here for this. I don't think I can get the triangle pattern out of here. I could do, yeah. You know, as an A wave, a B wave, and a C wave here for that, then up for the D wave, and then the E wave here. But it's kind of looking a little bit more like the S&P. But I'll keep the triangle pattern in mind. It's not like it's totally squashed. It's just a little bit warped at the moment, with this extra leg coming down here. But I've seen that before with patterns. It doesn't, you know, they don't all have to sort of line up exactly. So. But that's where we are with the indices. So really, just coming back here, just to rehash the indices before moving on to the other markets. We've either got a top in here and we come down from that point, or we have an ABC correction once we get that top in play and we go up. And it kind of looks like that could be the case, going up higher. But I think it's important to give them equal weight. And wait, the answer is in this little structure here. That's where the answer is, really. So we need to consider that first high above the level, then the A wave, and it'll probably be a bit smaller than I'm actually drawing it here. But what you need to do is you need it to see, like, that's all part of the same trend. You need it to be out of that trend, you know. You need it needs to be something separate from that leg up there. And then, of course, it's just across the top after that, you know. And that's the same with the DAX as well. So just allowing it to top out. So you don't need to do anything, just observe it, and then just see how that plays out. The markets are topping because I can see it in the Asian markets. You know, they're still pointing higher, but they're sort of they're struggling to move higher, you know. If I can just bring across the Australian market here, just for example, I can see that this is the A wave, the B wave, 1, 2, 3, 4, 5, and this is on what? This is on 10 ticks, but it's at the top here. Then I can see that as an impulse wave. I can see that as a corrective wave. I can see this is, so it wants to go up. This is at the the 50 here, the midpoint. But it's just, it's struggling to go, you know, they're all going to be struggling at that point to push up here. And they need to roll over and rebalance, you know. The next lot of buyers need to come in at that point. Okay, so all of that said, I'm just going to remove these because they'll just end up getting squashed up anyway there. So I'll leave all of those. And now that we've talked about those, we don't need those. And we're going to look at the the FX, I'm just going to remove these as well because they'll just get squashed up. We don't need those. And so the US dollar is obviously the inverse of what's actually going on at the moment, you know. So let's just get a little bit more data in here just to get that old high here. So if the other markets are going to push up, then the dollar's going to push down. So that means we'll go back to our, well, we could do two things. We could put wave 4 over here, and we could look for 5 waves to the downside here. That would be one way of looking at the situation, and still be bullish at this point in all of this. So that works. It's a bit like I said before, we can look at that as 1, 2, 3, 4, 5 here, but this was just I suppose it had equality to that one really, all of that, but we had the overlap there, so it's not such a good sign. But as an A wave down here, you know, we can have this as wave C over here, we can have this as wave B over here, and we can have this here. So we could have this, I can count this as corrective to the upside. I will just need to put this here as the A wave here, and copy that as the B wave, and have the C wave here if this was going to be the B wave high up here, because that way would look at this as 1 and 2 and 3 here, some sort of A, B, C for 4, and then up for 5. So an A, B and C wave up here for that. So I don't know which way that this is going to go at this moment, but I know if I give it a session or two, the answer will come out here for this. So I just need to wait for that, and because I need to wait for that, that means I need to also wait for the other markets as well. But you can see here that this is very much, you know, this move up here and the move back here is very much like the DAX and the STOXX 50. It's exactly the same really, isn't it, you know? So once again we have to wait. It's quite, you know, once again, this wave 4 overlaps this wave 1 here, so we could look at that as a corrective pattern, which I think is actually correct. So an A wave here, a B wave over here, and a C wave up here. That's one way of looking at it. The other way of looking at this is down for 1 here, an A and a B and a C back for 2, and then coming down here further. So I don't know. I have to wait. I have to wait for this to play out. You know, we know from the indices that this needs to push up. But once you've got a classic trading levels pattern across 98, then you can go long from that point. That point. We can go on the B wave as well, of course, the B wave here, if that's going to be there. So you can go here. But we need that set up to go long. It's as simple as that. And then we can look at 5 waves going to the upside at that point. I mean, the only other thing here, I don't think it's going to play out like that, is, let me just think about that for a moment. 1, 2, 3, nah, won't do that. I was just thinking as an A wave here, a B wave here, and a C wave up here further. And the pound's the same as well, really. So I could squeeze 5 waves out of this here, but doesn't really sort of work. It counts better as an A wave, a B wave, 1 and 2 and 3 and 4 and 5. So a 3 wave move here, which really puts it in the same boat as the euro here as an ABC for the A wave here, the B wave, and then the C wave, you know, like grouping these two together, leaving it in 3 waves to the upside, telling us that it's corrective. So this is corrective, this is in corrective, and even this is impulsive here. It's still part of a corrective pattern. It will either be a wave 4 up here or wave 2, you know, of a larger degree. So it will either be this wave 4 here, or it will be wave 2 in the bigger picture. Just depends on how you want to squash the lows up here. But I think we need to look at it as the A, the B, and the C here for this. And then we, you know, to confirm that, we need to look at this here, getting a classic trading levels pattern across the 98. So the arrival, the reaction, the first high above the level, then the A wave, the B wave, and the C wave going along above the B wave. Any long trade in here is doable, but you're taking on risk, so you need to trade less. Use the levels over here, the smaller levels, and build in. But I always find that, you know, if you're going from B to C here and you want to get in, either use the levels, but also to just work out where the 50-60% is here, and then and then you need that as support. You need that zone as support. You know, it gives you a little bit of an edge, because if that zone becomes support, you could squeeze a little position in here, and then one above here, and then one, you know, keep building, you know, half a dozen positions up into this space here. So yeah, so this is the same here. We could look at this as, I mean, we had to look at this as 1, 2, 3, 4, 5 here. So maybe the A, the B, and the C here. That's about the best I can do with that. This is 5 waves in this little move here, 1, 2, 3, 4, 5. This is probably 5 waves here, and this is 1, 2, 3, 4, 5. So there's at least one more little move to come up here before it's either a top in play or you get your ABC pattern at that point. And then you could go long there. And then we'd look at this as being wave 1 here, wave 2 here, wave 3 and 4 and 5 and so on. Take it up to 1.2. Normally wave A and wave C have normally got some sort of correlation with them in terms of equality, so we could look at that, roughly speaking, you know, just as a rule of thumb, you know, and then you always gravitate over to the closest largest number, you know, and then you see how it sits up here. And if this level here becomes a support with the classic trading levels pattern, well, then you know that we have to go up again. You have to know when you're wrong and you're right, and what you know, basically it's when to act, you know. Okay, well, I'll leave it all at that, but that's where we are at the moment for everything. So these are all really moving in, all the FX are moving in line with the indices. Okay, cheers.